Hey guys, Kill Stokes here. I want to share with you a quick video walking you through an intraday trading opportunity that we looked at today on the pound dollar. Now, footage comes from our live trading room. If you ever want to join us, feel free. It's part of your risk-free 14-day trial membership over at tier1trading.com. Hop in, share ideas, do some analysis, and start becoming a better trader by getting those daily reps. All right, let's hop in. Pound dollar, first thing I always want to do, identify what is our overall location. Well, broken close below, or broken close above this previous structure high. Where are we trading at? Well, we're trading at another level of structure, small level of structure right here. Could we push higher here? We certainly can. Not clear sailing by any means, but trend continuation traders, I would not fault you at all if you're looking for a move up to 128.5s. That's this high right here in orange. So again, always want to start with the bigger picture. What's going on? If I want to be bullish, I need to make sure that there is room to go bullish. And that is all we're doing with our higher time frame, our identification, our prediction phase. Like if I want to be bullish, I want to make sure it's not like, you ever see those cartoons where you open the door and it's like like Looney Tunes, where you open a door and it's like a sealed off like brick wall. Like you want to make sure there's not a brick wall there. You want to make sure it's actually a door that leads to somewhere, and then you can follow through with the rest of your trade. So let's go down to the 4 hour. Again, similar situation as euro dollar. Broken close above structure here. Again, we have this minor level of structure that we're running into, which you may or may not take into account. But bigger picture, we came back to an inside level of structure, and now we're seeing some rejection, right? We're seeing a much better rejection than what we saw on the euro dollar, right? So let's go down one more time frame to the hourly. Price action coming down to previous structure right here. Should be a 618 Fibonacci retracement for you guys that like fibs. Fibonacci retracement, swing low to swing high, right? Right on a 618. And now we have our same RSI swap, right? So we go directly from overbought to oversold. And now we have our tweezer bottoms, right? So the story that price action gives us here is 1, 2, 3, 4, 5, 6, 7, right? Siete. 7 bearish candles in a row. We end those bearish candles with a long tail. What does a long tail tell us? What type of tail does this tail tell us? Rejection. It tells us a slowing of the selling pressure. Maybe an entry of buying pressure, maybe a little bit of both, right? Now, the next time we get an inside bar with another rejection, right? And it's funny, we just had this conversation, right? So we get 2 very powerful signals. Now, if you want it to be picky, you could even say that, well, on this second rejection, not only is this a bullish candle, so the bulls won this session, but the bears weren't even able to push it lower. See how the tail on this is higher than this one? So the sellers got rejected even higher. Now, we know that inside bars are breakout strategies, right? So if you were an aggressive trader, what you would do is, in an inside bar setup, you do one of 2 things. You would place a buy stop either right above the inside bar or right above the mother bar. The mother bar is the previous bar. Right? And again, if your eyes aren't drawn to seeing these, just go to the little indicator deal and type in inside bar, and you'll get green arrows and red arrows whenever you see an inside bar. But an inside bar breakout is you would bracket the orders, right? You would put a buy order here and a sell order here. And whichever way market breaks out, you would enter. Now, what I like to teach is a bias inside bar, right? Because in this situation, you probably wouldn't be interested in a shorting opportunity. Am I right? If you're looking at this trade, you're only looking for longs. So you would be biased. You wouldn't be looking to kind of bracket it and go either or. You'd only be interested in the buy side. If the euro dollar is maybe the opposite example, where this is more neutral, so maybe you are interested in a breakout either way. But on the pound dollar, because of these clues, you'd only be interested in a breakout to the upside. So this would be an advanced way to enter this trade, meaning you would get in earlier. Is earlier better? What would you guys say? Is anything actually better in trading, right? We don't know. Earlier is not better, right? Earlier gets you in, it gets you in at a better price. Maybe gives you a better risk reward. Maybe this candle reverses and it gives you a false signal. Then it's not better. Waiting for confirmation. Let's say a higher high, higher close. That's what I'm waiting for. A higher high, higher close gives you more confirmation. Might give you a worse entry. Might give you a worse risk reward. Right? There's a give and a take to everything. You can't look for, you can't have the best of both worlds. So, a more conservative entry would be a higher high, higher close. And again, let's talk about where price action is likely to go to if we go up, right? So if we go up here, just like, I forgot, was it euro dollar we're talking about? I would expect a retest of the highs, right? You could look for extension. Again, we drew a higher line there. So continuation traders, I don't know if this one's a 127. Yep. Continuation traders, you can look for an extension as well. Yep, you have a 127 right at that level. That's pretty good. Right at our highs right here, we have an even handle number, right? 128 even, right at the lower end of this highs, right? That's the area that I'm interested in. So let's mark this off, just like Aussie dollar, where we have our lows right here. Our ATR is 14, right? I use a 1 ATR stop, so I'm going to take the low here. The low of this candle is 127.55. Minus 14 is going to put me at 41. So I'm going to steal one of these orange lines here. Oops, sorry about that. No, wrong thing. The low is 42. Blah. So that's going to put me at 28. Right about here. Looking for a move up to this level right there. And once again, in order to have a one-to-one to that level, I need to close right here. So not a lot of room for error there. Now, what did we talk about earlier before taking Aussie dollar? What else do we want to think about, just in case we can't get that one-to-one? Start thinking about secondary entries. Okay, if I can't get involved in a higher high, higher close, then I look for double bottom. And that's a secondary chance for entry. Now, if you are a continuation trader, and this is what hurts me in a lot of continuation trades, right? Because I'm a counter trend trader by nature, so it's very hard for me to get in these type of trades unless we have a very deep pullback, which is why I don't take a lot of them, which is why I like the Aussie dollar. But if you are a continuation trader, you've got a different story, because guess what you're shooting for? If you're not shooting for a retest of these highs or a higher part of these highs, you're looking for an extension up to that 127. You've got your 127 Fibonacci extension there. We've got structure from the higher time frame up there. You're going to have an AB equals CD pattern, if I remember correctly. All these pairs were the same, yeah. An AB equals CD pattern a little bit higher than that as well. Not a bad level to shoot for. So certainly another opportunity to keep an eye on. So let me get this into our pro trade log as well.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on. This is